Let's jump into today's webinar. So today's webinar, I'm going to be talking about prop trading in general, why prop trading, what the advantages of prop trading are, and why T3 specifically. I'll also be using one of my own trades recently as an example, just to highlight some of the information. So let's hop to it. So quickly about me, for people who don't know me, my name is Derek Oldensmith. I am senior trader and registered principal for T3 Trading Group. I have been trading professionally really since 2008, but I joined T3 and got involved in prop in 2010. So I've been with the firm for over 10 years. I started my own trading desk under the T3 umbrella in 2013. So I've been working with and managing traders for over 7 years now. Currently have a really strong group of traders, something like, I think it's in excess of 70, 75 professional traders that I'm working with on a daily basis. My spare time, for people who don't know me, I'm a big martial arts guy. I've been involved in martial arts really my entire life. I've been teaching martial arts for working towards 20 years now. I'm a retired professional kickboxer. I had something like 40 fights over the course of my career, won 2 world titles in 2 weight classes, retired from that sport, from competing professionally. About 1.5 years ago now, but I definitely love it and miss it. I'm generally a pretty competitive person. So let's get into the meat of today's webinar. So again, really we're talking about why prop trading. So I've covered some of these points in previous webinars, but today I'm going to talk very specifically about the proprietary trading advantage and why T3 specifically. I'm going to focus on 2 of the more major benefits of proprietary trading today. There's more. What I'm not really going to spend much time focusing on is all the free professional training that all the traders get that I work with, training and development. And I'm not really going to talk about another one of the big advantages, which is just being a part of a community of other professional traders. I have a really strong group of traders that I'm working with right now. Pretty diverse group, ranging in experience from some guys who are, relatively new, just getting started on their career, to other guys who've been professionals for decades, former floor, former pit traders who are now working with T3 on the proprietary side and doing electronic trading with us. So the first main benefit that I'm really going to be talking about today is access to capital. And this is probably the biggest one. So when you trade proprietary with T3, you're going to get access to a lot of capital. Generally, the way that it works with us is incoming traders, after they have passed licensing and things like that, are required to commit a capital contribution to work with us. And then we start by providing buying power on top of that capital contribution. Usually, it depends a little bit on the person and the account size, but usually we'll start by providing something like 20 times a person's capital contribution for intraday trading and 8 times a person's contribution for overnight positions, and then traders are compensated through a profit split. So what is the advantage to all of this capital? First and foremost, I never have to think about how much a stock costs. What I have to be concerned about, I'm going to spend a good deal of time talking about this, is risk. So I don't have to be concerned, if I need to buy, here's my trade, I need to buy 3,000 shares of Apple or what have you. I don't have to be sitting there with a calculator figuring out, how many dollars is buying 3,000 shares of Apple going to cost me. I just know that I have enough buying power to be able to implement that trade. I execute the trade. What I do have to be concerned about is the risk. That's the math that I'm constantly doing. If this position goes against me, how much is it going to cost me? But having access to that capital and not having to worry about that first problem of how much a stock costs, that opens up trading possibilities that really aren't possible in like a standard cash account or a margin account with a retail brokerage. There are certain types of strategies that you may want to implement as a trader that are very capital intensive. Whether those are, intraday scalping strategies, or personally, I have a quantitative strategy I developed that I know for sure would not be possible on the retail side, just because it really needs access to the firm's capital in order to implement. So first and foremost, access to capital opens up a whole other realm of strategy possibilities that aren't possible on just say a retail cash or retail margin account. So another time that having access to this capital is really important is if you're a consistently profitable trader. If you are a consistently profitable trader, you have a set of strategies that pay you consistently. The business really becomes all about scale. Adding scale to consistent strategies can really, jumpstart your growth and increase your return. So adding scale is huge. T3 is a very well capitalized firm. So we have, traders who are working with, capital in the millions of dollars, and we're able to provide that scale for big traders, which is awesome. Also, if you have like a real A+ idea, again, if you have a real A+ trade, an A+ opportunity, you want to be able to load the boat in that opportunity. You want to, put all your chips on the table, so to speak. Having access to that capital enables you to do that. So let me talk about just one of my own trades from recently. So let's start with our daily chart here. So this is GDX. It's a gold miner ETF. So on this day here, which is May 14th, I had a great trade, and it really worked out well for me. I basically bought it right off the open. So let's go to a 15-minute chart because I can take a look at that day. So here is the trading session for May 14th. Right at the open, I was buying the stock. I don't remember the exact price. I actually had a few entries. I bought multiple times, all within probably the first couple of minutes when the market opened at 9:30. But I probably ended up getting an average price of like $34.07 or so. And my stop loss on the trade was a penny below that opening low. So $34 was that low. So I had my stop at $33.99. And there's a bunch of reasons why I took this trade and how I was able to execute it. So first of all, if people remember, just to go to the market real quick, on the 13th, so that trade was placed on the 14th. On the 13th, the market had a pretty bearish day. It was pretty weak. So we can see that again here on the 15-minute chart. So this is May 13th. The market had broken down the day before that, when it broke through 290. And we really saw that afternoon, the whole next day, and that following morning, really kind of give some pleasure to the bears. We really pulled in pretty hard and fast. At the same time, as the market sold off on this day, GDX, which again is a gold miner ETF, held up really, really well. And these miners, by the way, have been something that I've been involved in for a while. I currently still have a position, so full disclosure on that in this GDX, and I still have some of the position that I even purchased here on the 14th. So I liked how this was able to hold up really well in the face of the market. The commodities, which this is correlated to, gold and silver, also was able to hold up really well that day. And I felt that the only reason why this GDX didn't really go already was because the market itself broke down. And you can see that GDX, here's the daily chart again, had been holding up really well, kind of basing out here, flagging out here. So how did I know? Well, first of all, I didn't know because you never know anything about trading, right? Trading is all about risk, reward, and probability of success. I'll get into that. But what made me think that this could be the day? Again, market sells off yesterday. This holds up. Commodities hold up. I also have kind of more of a qualitative fundamental thesis behind the miners right now. Information came out a few weeks ago that the spread between spot price of gold and the paper price, the contract price of gold, had become wider than it's almost ever been in history. Only a couple other times in history had that spread become so wide. So in my brain, I was like, okay, well, that's good for the miners. Also, I'm thinking in my head, what about all this Fed stimulus that's going on, right? The market, I'm not even in my home right now. I live and work in Manhattan. My wife and I have been out of the city for working towards 3 months now. My friends who are still there say things look like, they're starting to improve a little bit, but the financial center of the world, New York City, has been shut down. The entire globe has been shut down. Yet the market is what? Depending on if you're looking at the NASDAQ or the S&P, something like 8% off all-time highs and making new recovery highs even just yesterday. How is that possible? Well, it's possible for a few reasons. One, the market's a forward-looking mechanism, but also there's just been massive federal stimulus, Fed stimulus, financial stimulus from the government. So asking myself, what are the consequences of this? Now, it's interesting to note we did not see any inflation really come into play when the stimulus occurred during the financial crisis. But typically, if you were studying economics, you would think, well, all this stimulus probably leads to inflation. So I have that in the back of my mind as kind of a qualitative thesis. Also, what I said about the spreads, I had a qualitative thesis, and I've been involved in these miners for a while. I've been watching them for a while, but then this all leads up to this particular trade. So we have this beautiful consolidation here. It holds up really well when the market breaks down, and this morning is the morning. So right at the open, I'm watching it. Let's go back to our 15-minute chart so we can see that day. And here's where kind of your tape reading skills come in, which is also an advantage of being a professional trader. You can see depth of market. All of a sudden, I saw a very large buy order come into GDX at $34. I'm already feeling really bullish on it. I know that when this thing goes, it can really have momentum behind it. Usually it gives moves that are like 2.5 days. We've seen that here. Here was a big breakout, which I also think I was involved in, of 1, 2.5 days. Then here again, right? We had day 1, day 2, 2.5. So that's what I was kind of looking for here on this day. Maybe it really goes today. We finally break out of this consolidation. There's a lot of things I like about it, and maybe I could get like that 2.5 day type of move on it. And then I see that bid come in. Why is that institutional order coming in important to me? Because, well, first of all, I know that now the institutional eyes are on it, and it's also providing liquidity to me to help me on my trade. So I put my risk on, and guess what? I'm wrong all the time. So I don't want people to think that even though I'm showing a trade that worked out really well here, that like I only have trades that are correct. If you ever speak to any trader who says that every trade that they take works, just run the other direction from that person, because there's no one who's right 100% of the time. This trade worked out really well for me. So again, basically coming in and buying heavily, second it opens, probably have about 8 cents risk on it. So if I have about 8 cents risk, that's going to be about $80 of risk for every 1,000 shares that I buy. And I get this beautiful initial momentum move. Awesome. It rips for me, really exceeding my expectations from 34 to 35.50 in 15 minutes. Awesome. But again, the second the market opens, I'm loading up. So what are the advantages of being a proprietary trader? I viewed this as a real A+ type opportunity for all of the reasons that I already described. Now the market's open. I'm not taking my calculator out and figuring out how much dollars it costs for every 1,000 plus shares that I have to buy at $34.08. Can I afford to be able to buy as much as I want to? I don't have to think about that. I'm just placing my bids out, taking offers, getting my stop loss in, and I'm concerned about the risk amount, right? I'm concerned that if this trade fails, I'm going to lose $80 on every 1,000 shares that I bought. That's what I'm concerned about. So that enabled me to execute very quickly. I have always found over the course of my trading career that the best trades in the market give you the shortest window of opportunity to be able to get stock in them. And this is a perfect example of it. If you were waiting till 9:37, you missed the entire opportunity. You had to be prepared for it by doing your research ahead of time. You had to know what you wanted to see, and you had to be able to react. I didn't know that institutional order was going to come in until I saw it come in, and that helped me react to get even heavier in the position. And then that was it. It was just gone. So huge initial move. I still have some of that position on now. And I was able to sell some yesterday pre-market somewhere in front of $38. So, I mean, think about that from a risk reward, right? If I'm buying here with about whatever 8 cents risk or so at 34 bucks, a little above 34, and I was selling some stock yesterday pre-market because it was trading much higher pre-market at one point, and then they whacked it back down pre-market and into the open, and I'm selling in front of $38. That's like in excess of 50 times risk reward. So this is what I'm looking for generally. This is how I like to trade, by the way. The way that I like to trade is I try to look for intraday risk, right? Risk on an execution time frame, risk from a 5 or 15-minute chart for daily chart reward. I don't have to be right a lot to be able to make money in that scenario. If I can get, believe me, it's not always this good, but if I can get 50 times my risk on trades, you don't have to be right very often in order for that to work out. So again, I just wanted to kind of go over that personal example because we're talking about the advantages of proprietary trading, and that is one of the big advantages, right? It's that capital access. Sometimes you need to load the boat all at once. Other times you want to build into a position, and that's also something that you can do. You can start with a feeler position, you can buy a little bit, kind of build into it, and then when things start really showing you that it's lining up properly, that's when you can get heavier in that position as well. So access to capital is a huge advantage, but it can definitely be a double-edged sword. Access to large amounts of leverage, large amounts of capital, when things work out great, like they just did in the trade that I just went over, awesome. You can get really excessive return. But if you have all that capital outstanding and you don't have good rules in place for risk management and money management, you can really hurt yourself just as fast. So you got to keep that in mind. I am constantly emphasizing to the traders that I work with, whether you're a retail trader, and T3 has retail trading accounts as well, by the way, or if you're a professional proprietary trader, risk management is the key to the business. I end almost every morning meeting in the exact same way. I say, team, good luck today, trade smart, let's have good communication, and above all, make sure that you are managing your risk. So the risk that I have to be calculating constantly is trade risk. It's like I just went over on that GDX trade. If I'm buying there with 8 cents of risk, the difference between my entry point and my out, every 1,000 shares I take is risking approximately $80. I need to know that. And I've spoken about this. I did a webinar a couple weeks ago on game planning, right, where I talked about how I like to cover my risk when trades start to work out for me, so that I can get what I refer to as like risk-free stock. Technically, there's no such thing as risk-free stock, but if I am able to cover my risk on the position and I have excess stock that I'm holding on to, where if I give the stock all the way back to my out, it means I'm going to lose nothing or make money in it. That's kind of what I refer to as like, quote unquote risk-free stock. The other thing I need to be worrying about is portfolio risk. So for myself, I am very active as a trader. I day trade, I swing trade. I have positions that'll go for seconds. I have positions that if things really work out, I'll sometimes hold for over a year. So if I have built into a lot of positions, we saw in my disclosures earlier that I've got, I'm not sure the exact number, something like 18 positions on. I need to know the worst case scenario for that entire risk, right? For that entire portfolio. If I've got all these positions on and they're all to the long side and they're all market correlated and the market rolls over, I need to know what my worst case scenario is. Or maybe, kind of like I am now, I'm a bit hedged right now. I've got a decent sized position in this SPXU, so that will make money if the market goes down. I have exposure to commodities, particularly silver and those gold miners, so they have a lesser correlation to the market. And I've also got some longs on, Apple, Microsoft, Alibaba, etc. So I still want to know the absolute worst case scenario. I've definitely had it happen to me in my career where I thought I was hedged because I was short SPYs and long whatever positions, and next thing I know, the SPYs are going up and my positions are relatively weak and they're going against me. So I still want to know that, but I know that I have a lower probability of that absolute worst case scenario happening to me because I've got some positions on right now that are both sides of the market. And if I'm feeling really confident though, I'll load the boat all in one direction. So trade risk, portfolio risk, you really, risk management's the key. I tell my traders probably 80 to 85% of what I'm doing as a trader is managing risk, and 15 to 20% of what I'm doing is about maximizing reward. Idea information, idea formation is really important as well. I spend a lot of time every morning. I mean, I've been, since quarantine has started, I don't have to make that commute to the office. I've been getting up, 5:30 most mornings Eastern time, and I'm researching from 5:30 till basically 9 a.m. When the morning meeting starts. Reading news, reviewing technicals. I already kind of went over one trade, but the way that I like to trade is I'm primarily focused on technicals. Technicals tell me how I want to enter, when I want to enter, how I want to manage my risk, how I want to manage my game plan. But I am also a believer in what I refer to as these qualitative fundamentals. Some examples with that GDX trade I just described to everyone. Qualitative fundamental research is trying to understand what the larger impacts are going to be of all this fiscal stimulus on our economy, right? So that leads me to believe that maybe gold and silver and the miners are, potential outperformers in a scenario where we see some sort of inflation. And the truth of the matter is, I don't even need inflation to actually work. I just need enough people to think that there's a potential of inflation to come into play for those moves and those names to come through to pay me. And also the qualitative research was what I was talking about the spreads. So I'm paying attention to that, but then I'm waiting for the technicals to tell me when to execute, right? I saw the relative strength. I saw the institutional order flow, that bids start to come into the marketplace. There was a lot of things to be able to like there. That told me, okay, right now is the time to execute. This is how I'm going to manage my risk. If it goes down to this price, I know that my idea is either wrong or not ready yet, and I can reassess. And if it works, great. I've got game plans in place in order to, maximize that as well. Okay, so that is, one of the big benefits of proprietary trading. The next big benefit I'm going to talk about that we have here at T3 is direct market access. And this really applies for both our professional prop traders and our retail trading accounts as well. So T3 Trading Group also does have retail trading accounts. They're standard margin, Reg T, retail accounts, but we do, one of our biggest advantages on our retail side is direct market access, meaning that you are able to control your own routing. And if you're an active trader, this is, I think, extremely important, but very underrated. A lot of people don't know about this. So, the real way that you make money is by having good ideas, having good execution, having your trades work out, having good money management. But order routing is also extremely important. When you have a regular retail account, again, with most of these online brokerages, you do not own your routing. I believe it says that in the fine print when you're signing up. So they're choosing how to route those orders. And what they do is they sell out those orders to HFT firms. And then what those guys do is they're basically either trading against your order, or they're front running your order, or if it's a market order, they are able to kind of make their own spread on that. So you might get a worse price because they're making their own spread than what the market actually is. And if you are providing liquidity to the market, they keep the rebates. So effective order routing can really be huge. And for me, for the way that I route my orders, I can get paid by the ECNs, right? So I got paid by ARCA, one of the main ECNs, for my trading last month. And the difference between poor order routing and good at order routing, routing in such a way where I'm maximizing my P&L and I'm maximizing my rebates, versus routing in such a way where I am taking liquidity from expensive venues, can turn out to total about a half penny per trade. So if you trade 1 million shares a month, which I think I traded more than 1 million shares last month, if I routed every single order in such a way where I was saving money, that could be $5,000 for the entire month. That's really significant. So when you start thinking about it like that, that as a professional trader or even a retail trader with T3, where you have direct market access routing, you're getting paid rebates on your limit orders. You're getting paid to trade. And we do not sell your orders out to any of those high frequency trading firms. And again, with the way that they are routing your orders through those online brokerages, my guesstimate is that you're really paying a commission cost of about a penny per share. So again, if you traded 1 million shares, that's $10,000 a month. So that's really significant. You know, if you're having direct market access and you're routing appropriately, that could be saving you $5,000 a month. Plus, if they're not front running your orders, that could be saving you another $10,000 a month. It's for the active trader. I tell friends and family who are just investors, they have their regular 9-to-5 job, they're not active traders, they buy a few stocks a quarter or whatever it is as part of their long-term saving plan. I recommend to them, use Robinhood, use TD, use E-Trade, because for those people, it doesn't matter if you're getting robbed of a penny here or there. But if you are an active trader, if you are a day trader, learning and understanding routing is extremely important. I actually teach a class as part of my training program for my professional traders that is entirely on routing, because it's a really complex issue. So my class usually goes for about an hour and a half. So I really get into the weeds of understanding everything and learning to be able to maximize your costs and things like that in that class, because I want my traders who I'm working with to be able to maximize their P&L, and understanding all of this stuff can really, you know, make and save them a lot of money. So why T3 Trading Group? So T3 Trading Group is one of the best, if not the best, proprietary trading companies in the country, in my opinion. We are also one of the largest. Let me start with that. So us being large, again, is really important if you're going to be a successful professional trader, because we can help you add scale to what you're doing. And some of the traders that we're working with are really big, and they come to us because that they know that they can, one, trust us with their capital, and two, that we can still facilitate the needs of some of the biggest traders that are out there. At this point, probably a majority of our traders are remote, so that's great. You know, remote traders get access to the virtual trading floor system that we have. We also have some main offices. Again, I am usually working out of our Manhattan office on 1 State Street Plaza, downtown Manhattan in the financial district. For me, it's just a bike ride from where I live typically. Unfortunately, you know, the office is set to be closed because of the virus situation, but we've got our headquarter office in Manhattan. We've got a couple offices in New Jersey. We have an office in Atlanta, Georgia. We have an office in Boca Raton, Florida. And again, our remote traders, our transition from getting our in-office traders to remote was really seamless, because the majority of our traders were already remote to begin with. We already had the virtual trading floor in place, and if anything, it's made our virtual trading floor system, the one that I run in particular, the Pro Desk room, better than it's ever been, because now we're totally focused on that. On the professional side of our business, we have 4 different software platform options: Lightspeed, Fusion, Sterling, and Wex. On the retail side, we have 2, Sterling Trader Pro and Fusion. On the professional side, again, we have 3 different asset classes: equities, options, and futures. And we're regulated, which I think is really important. I think that if you speak to a firm out there who says you can trade professionally with us and not be licensed, some red flags should go up, and you should be looking more closely into that. We are an SEC registered broker dealer and member of FINRA SIPC. So we are regulated, and for better and for worse, that means that all of our traders do have to become professionally licensed by passing the SIE and Series 57 exams. And if anyone has any questions about this, I'm going to have my email address at the end, by the way. You can put your contact information into the chat here through the webinar system, or you can email me directly. Again, my email address will be at the end. The other advantages, I wasn't really going to spend as much time talking about this, but we do also offer a lot of training. That's something that I've always really prided myself on. I put a lot of time and effort into the traders that I work with. Daily morning meeting at 9 a.m. every day, Eastern time. Afternoon meeting at 4:15 p.m. It's an optional 1-month training program when you first get started. I also have a great team of traders who help me to run and to manage the group. So, we are always available for questions. Questions are encouraged. My number one goal is for me to be the most successful trader that I can possibly be. So after that, my number one goal is to make the traders that I'm working with as successful as they possibly can be. I strive for profitability. That's what I want to see from myself and from the traders that I work with. You also, again, this is very valuable. I think whether you're remote or in office as a trader with us, but you'll get access to my VTF room, you get access to Scott Redler's VTF room, you get access to the Redler All Access newsletter, which is great. I can tell you, I've been with the firm since 2010. When I was coming up and I was a new trader, I learned so much from Scott and from a lot of the other senior traders who are at the company. And if it wasn't for them, I probably wouldn't be where I am today. And it's great that our professionals, get access to them as well, in addition to being able to work with me. Okay, and scale. I talked about this a little bit also, but this is really important for our experienced traders. Our experienced traders who are coming in, who have already been trading, who are well capitalized. We are a very well capitalized firm. So I think the number that was mentioned earlier was, capital contribution of $50,000. We can give you $1 million to work with. Many people will join T3 and put in capital contributions actually significantly higher than that. We love working with big traders, and we can really facilitate their success. And we can offer the buying power and anything else that they need in order to maximize their success with the company and for their own trading. So again, here's my email address. Shoot me an email, reach out to me. Happy to speak to you directly myself, or to have a member of my team speak to you about trading with T3, either on the professional proprietary trading side, give you more details on that, or on the retail side. So I see here, is there a fee for the optional 1-month training? No, there is no fee for that. Again, like I stated earlier, what I want is to work with traders and to make them successful. So everything that I do on my end is entirely done for free, just because I want you to be successful. That's how we are going to maximize return for both the trader and for the firm, is by creating successful traders. So that's our goal. What else? So the next question, is there a fee for one-on-one mentoring, and how often can that, I don't know if that question, and I guess how often. So Is there a fee for one-on-one mentoring, and how often, I guess, do you have access to it? So no, again, there's no fee for anything like that. Specifically in our office, let me start with that. And right now we're building all the functionality that I had developed for in the office also for our remote traders. In our office specifically, I have a mentorship program, which is basically a daily trade review. And that takes place after my afternoon meeting each day. So each week, all the traders on the desk basically get a partner for that week. And they work with each other, review each other's information. And that's always done under the guidance of someone that we consider to be a more senior trader for the specific mentoring and the questions. So the idea here is traders are holding each other accountable for their decision-making process. They are helping each other to make adjustments to their trading strategies that are necessary for success. And we are here to guide them through that as best as possible. Remotely, we've been working on that as well. I have one specific senior trader who's a member of my team who is now, we're building out a system for him to work with people as they're onboarding, very specifically on a one-on-one basis so that they can, get that level of mentorship as well. Next question is there a desk fee? No, there is no desk fee to trade professionally with us. Professional traders do have to pay for professional market data, so you should be aware of that. That is for that direct market access. So that is not an internal T3 fee. That is going directly to the New York Stock Exchange, NASDAQ, and Amex for access to that information. So, again, the GDX trade that I described earlier, if I wasn't paying for that data, I would not have seen that institutional order come in. And that alone, seeing that enabled me to size up in that trade to a point where, that one trade is going to pay for, an entire year's worth of data fees for me, most likely. So there is no desk fee. As a pro, can you trade odd lots for the purpose of trading larger stocks? So the rule is odd lot trading is allowed for stocks that are in excess of $100. If the stock is less than $100, you cannot trade odd lots. So that's that rule. Okay, so I guess that is it for today's webinar. Again, really appreciate everyone for listening. Shoot me an email. My email address is listed here, and we'll get back to you. Have a great day. Happy trading. Let's get out there and make some money. If you'd like to learn more about prop trading, click the link in the video description.